Welcome everyone. Welcome to this episode of Budget Ki Baat. I have with me Mr. Suresh Soni of Baroda BNP Paribas AMC. And once again, we are going to talk about the nitty-gritties of Union Budget 2025 and its impact on the markets. So let's start from the very top. Let's talk about the number that everyone was looking forward to this year, which was the capex number, because honestly, this has been the signature of the government for the past few years, wherein they have been delivering capex and making people happy with that. Are you happy with the number this year?
Sure. So Vishu, thank you first of all for having me, and then great talking to you and the audience. So if you look at the focus of this government, and I'm not limiting to this budget alone, but over a longer period. So if you go back to about 8-9 years back, India used to spend only 1.5% of GDP in capex. Over the years, from 2017 when it was 1.5%, this year the proposed capex is 3.1% of the GDP. So it's doubled as a proportion of GDP. And by the way, between this period, the GDP has also doubled. So the capex spending in rupee terms has actually grown by 4 times, from 2.6 lakh crores sometime in 2017. We are now at proposing 11.2 lakh crores next year. So that's a big jump. And that shows over a period of time the orientation of the government to increase the resourcing to the capex, which is why you look around, you see so many roads getting built up, new metros coming up, expressway under construction. And of course, if you're in Mumbai, then you do complain about traffic because of all the development work is happening. But the reality is capex has been a hallmark of this. And as a result, what we are witnessing right now is an increased allocation to capex in every single budget. Now, of course, what has happened is between last year to now, the growth projected is up only about 10% compared to the revised estimate of the previous year. By the way, that's not a small number. That's a good number by itself, because in the previous year, government has actually struggled to spend that money. In addition to that, the government is also increasing its outlay on PLI as well as grant to the states. So if I take all of that into account, year on year, there is an increase of 17% in capex. So capex actually has continued to be a good part of the government's initiative. In the initial years, when they were ramping it up, it grew by 30% YOY. Now it's growing 10-15% of YOY, which is still very commendable. And that should allow the economy to continue to be in a growth mode on increased spending and in turn fueling all our allied sectors, cement, steel, whatever, and all the construction industry. So I think the budget in that sense has been fairly decent.
Absolutely, sir. Sir, talking about the growth perspective, there's always the concern of inflation that comes along with it. The fiscal deficit this year has been pegged at around 4.8%, and then next year they're targeting for 4.4%. Do you think this is enough? This is prudent enough to give a leeway to RBI to kind of relook at the interest rates and ease out there a little bit?
Yeah, I think on this factor, again, I think the budget looks fairly balanced, because if you go back, prior to COVID, we used to be at around 4.6, 4.7% fiscal deficit. During COVID year, we went all the way to 9.2, which was way higher than what we witnessed. From there, it has been a steady reduction. Current year 4.8%, next year expected to be 4.4%, which is quite a restrained fiscal outcome. So what government has actually done is that it has in fact kept the overall subsidies under check, has generally ensured that the relevant section of the economy get the right distribution, but at the same time, overall, they are conducting themselves in a fairly responsible manner. When the fiscal deficit is in check, it creates an elbow room for RBI to do reduction in the rates. So right now what you witness is inflation is relatively moderate because it went higher initially, but then it's moderating. Fiscal deficit is also kind of coming under check with the new budget. And overall, RBI has increasingly shown willingness to increase the liquidity in the market by doing the OMOs that we are witnessing. And therefore, over a period of time, we should see reduction in the rates, definitely.
Absolutely. So getting to the main highlight of this budget, which everybody is excited about talking about, is of course the tax ESOPs and the consumption side of the story. roughly up to 12 lakhs, nobody has to pay taxes. That is expected to, and then beyond that also there are ESOPs, which is expected to bring somewhere around 1 lakh crores of the amount that people are looking at, I think broadly. Now, this amount, how significant is this according to you? And B, the second part of it is, which sectors do you think this flow will go into?
Sure. So I think the amount is very significant. It's a bold step. Just to be very clear, I think it's not an incremental change, but it's a delta change. So the 12 lakh number, which is basically 1 lakh rupees a month kind of a salary, the person pays no taxes. So the definition of middle class in that sense has got a bit changed. And to that extent, I think it's been a significant positive move. For a salaried people, it becomes 12,75,000, including the standard deduction. Now, what do people do with this money? See, in India, typically, if you really look at it, we have a savings ratio of around 22 to 25%. So if any one of us gets 1 lakh rupees extra, which is what roughly we will get individually, we would probably end up spending 75,000 of it and will end up saving 25,000 rupees out of it. That's the rough distribution we do. So where does it benefit? It kind of leads to more money in the bank deposits, because banks have lately been struggling for deposits. So some 20-25% would go there. And 75,000 that you typically end up spending, what are you going to do? Are you going to take bath twice a day? Probably not. I mean, if you take twice a day, you're not going to go 4 times, right? So you're not going to buy more shampoo. You're probably not going to buy more soaps. But what you'll probably do is you'll go a little more towards premiumization, maybe in the consumer side. And you'll spend a little more money on buying consumer durables. So, for example, a two-wheeler sale or car sales, or probably even a housing purchase. Those are the ones where we would see a greater impact. So there are two sides of story. One is on the consumer, a bit of a premiumization. And on the other side, discretionary, as we call it, there you would probably end up spending a little more on the automobile kind of things, or maybe on a house. So in that sense, it kind of is a positive. And these things, typically the way it works is it's more a spark. So what you do as a finance minister is you ignite a spark and hope that it builds into a momentum. So the extra money that comes into the consumer's pocket and the consumer spending that he does, hopefully then that percolates down into the economy and leads to much more multiplier effect.
Absolutely, sir. Sir, now that we're discussing this, this is a question in pretty much every investor's mind right now. Should they rebalance their portfolio a little bit, to have a bite of the consumption theme as well? Because so far, at least for the past few months, capex heavy sectors like defense and capital goods have been the darling of investors, retail investors at least, and they have seen their portfolios full of them. And then there's another part to the story where, because of the recent correction in the markets, they are available at, if not good, at least better valuations than they were, let's say, 6 months ago. So they have two choices in hand. One is buy the capex theme at a better valuation. The other is get a bite of this new and emerging theme of consumption story. So which one is your bias towards?
Sure. The capex stocks, in all fairness, had actually reached a very stretched valuation at some point of time. Capex, defense. There are times when narrative overtakes the valuations. And some of these sectors went through that phase. From there has been a correction, but I still think that the valuations are a bit stretched in some of these segments. I would favor a little more tilt towards consumption. I would also go towards not only the premiumization FMCG as well as towards maybe automobile. And the second thing, or housing maybe to a certain degree. And the other thing that I would say is in terms of capex itself, probably rather than buying capital goods companies, one can look at cement and a few other areas where the profitability had suffered in the interim because the government spending suffered a little bit. But as that starts happening in the next year, probably these sectors would start doing well.
Right.
So infra and cement would be my pick vis-a-vis, let's say, going directly onto the engineering companies or machine manufacturers kind of thing.
Right. Absolutely, sir. Sir, there were also a number of other schemes and announcements in the budget as well as they are every year. For instance, we had Heal in India to run for tourism. Then we had something for nuclear energy, something for EV sector. The lithium-ion battery import duties were reduced. Do you see any of these themes significant enough to so as to keep a sector in the watch list?
I would say power sector, I think, continues to see a lot of focus from government, and the outlay also went up by close to 20% YOY. Within the power, the big announcement was about nuclear, but I would be a little cautious there because, the 100 gigawatt that we are talking about is 2047. Nuclear is generally a very long gestation form of energy. So the earliest you will see the first lot of small nuclear reactors to come would be in 2033. That's about 9 years from now, because it takes a long time to build it. So, but overall focus on energy is very clear. Overall focus on self-sufficiency in energy is very clear. And therefore you see continued push towards the renewable energy as well as EV and overall outlay on the energy going up. So to that extent, I think that is one sector that should merit attention of investors. Interestingly, that sector has also underperformed a little bit last year and valuations have been fairly reasonable. And I would say that is where I think there could be some interesting opportunities for investors. So you could look at some energy funds, you could look at some themes into that. And that could be one area of investment, I would imagine.
Absolutely, sir. So moving beyond this current budget theme, what are some of the themes that you see emerging in India, let's say in the next 5 years to a decade?
So I think, see, 2-3 things that are very clearly distinct. For a very long period of time, we kept saying that when we hit, 10 years back, we used to say when we hit $2,000, $500 per capita, the consumption patterns will change. And we are here at that point. So when you hit that kind of number, then the demand for consumer durables or automobiles goes up meaningfully, which is what we are witnessing today. You also see an increased demand for wealth management, asset management kind of products, because consumer is becoming more and more aspirational. So from a thematic perspective, those are some of the spaces, asset management, wealth management, or even for that matter, some of these areas where we see big changes in the trends of consumers. Those are the areas where we would see significant growth. Insurance, asset management, wealth management, those are the ones which I would put structurally there. The other thing, as I said, automobile, housing, those are the areas which will see further fill-up. We are a growing economy. We are one of the few areas in the world which are not only large, but also fastest growing. And unlike a lot of other parts of the world, our fiscal deficit is in check, our inflation is in check. So the growth trajectory is very clear. So I think overall environment is very conducive for investment. And investors should generally take a general constructive approach on this market. The other part that has happened, in fact, is, leaving just the budget aside, but over the last 6-8 months, one thing that has happened is our valuations have turned reasonable. So today we are trading at average valuations at which what Nifty has traded over the last 10 years. So any suggestions of overvaluations in the market, I think those are all taken care of. So investors can approach this market with a medium-term perspective, stay invested in broad diversified areas. There are some themes that I said could be interesting, which is the wealth management, asset management, energy, and some of these themes that people can work on. But broad brush, it's a constructive market.
Absolutely, sir. Sir, whenever we talk about opportunities, of course, the risks are that's the other side of the coin. What should the retail investors be wary of? Something that should take care of as to minimize their risks?
Sure. So I think risk will continue to happen. This market is a very interesting place. You'll have a new headline every day and you'll wonder how to react to it, right? So before you have digested the budget, you would have Trump doing something. So I think something or the other will keep playing in the market. Our objective as investors is to try and spot opportunities which are more durable long term rather than reacting every single day to every new news that comes in. And as long as we keep that thought clear in our mind of staying invested for 5 to 10 years at the minimum, it will create one of the best wealth management opportunity that anyone anywhere in the world has. Second thing I think I would generally say is that you should always ensure that you do not overstretch yourself. The only way you stay long into the game is that you start with the stakes that are sustainable. If you overstretch yourself right at the start, then chances are every moment there's a decline, you'll panic. And you know it very well that we don't lose money when the market panics. We lose money when we panic. You have to try and minimize a situation where you have to panic. So be disciplined about investing. Do not be over exuberant about it either. But at the same time, have confidence for long term. And it works out very well. I think sometimes, we work too hard and we try to be super active. Investing is one area where higher activity does not lead to higher returns. It is just more measured, calculated, long-term investment approach that makes the best money.
Right. Absolutely, sir. And of course, before we conclude, any parting advice that you'd like to leave our listeners with? It can be related to this budget or something that they must always remember.
I think, as I said, we are, as a country today, we are a lot stronger than what we have been through over the last multiple years. Our macro fundamentals, for a country to sustainably grow, you need two things. You need a high growth trajectory, and you also need strength in the macro fabric. The strength in the macro fabric creates the chassis on which the vehicle can move fast. Because otherwise, if your macros are breaking every other day, then you won't be able to grow sustainably. So India has managed to fix its macro by fiscal discipline, by inflation being under control, by currency reserves being healthy. And at the same time, we have a growth impulse in the economy driven by, all of us a large consumer base, which is all aspirational and is growing quite well. So we have got both the elements, growth as well as stability in this country. What we need is a stable mindset amongst us as investors. And if we are able to make that, then this is the best wealth creation opportunity. Invest for long term. I think as an industry, we have over a period of time created a lot of tools like SIP. I'm sure you popularize it a lot with people, or for that matters, investment into asset allocation products like Balance Advantage. I think that allow you to smoothen your investment journey and bring some amount of discipline. I think just keeping that would allow you to stay long in the game. And India is certainly a long-term compounding story. This asset class has delivered nearly double of what a traditional fixed income would have delivered over many decades. And the impact of that in the long term becomes very meaningful, very pronounced. So the budget continues to follow the momentum that is already there in the economy. It boosts consumption, it boosts capex, and at the same time, it continues to ensure fiscal restraint. So there's a stability dimension and there's a growth dimension. Both are there. So stay positive and invest for long term.
That's brilliantly put, sir. Thank you. Thank you so much for your time and your insights. And I hope you'll allow more such sessions in future to learn more from you, sir.
Thank you so much, Vishu. Pleasure talking to you.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.